Is this connection okay? Can you hear me okay?
Yeah, it's great.
Okay. All right.
This is our 80th conversation. So, uh, Michael wanted me to list off a name of black swans. So, Peter and I were just trying to go through them all
Uh,
from the 87 crash, long term capital, the Asian contagion, the Mexican debt crisis, all that stuff.
well, and I wouldn't call them all black swans. Some we definitely saw coming. So, uh, again, having read Talib's book more times than I care to admit, to classify is interesting. I don't classify. Look at so 87. I was short going into it. So is that a black swan? No, because did anybody have the sense that it was going to be that meaningful? Probably only one crazy Howie who was looking for a major retracement. I think down to 171 in the S&Ps, if I'm not mistaken. Um, so I don't classify those as black swans, by the way.
Okay.
Nor do I classify 1992 September with the Bank of England. It's not a black swan. People were too well positioned to refer to it as a black swan. The dot-com, I don't call that a black swan because, again, people were looking for it. They were just early, even, Jeremy Grantham, Buffett, and amongst, many others. It's the same with the great financial crisis. I can go back and show you multiple places where I was in the media looking. Did he know exactly how? No, but there were pieces to the puzzle that certainly shows themselves. So I'm not quick to call those black swans. I don't think Talib would call them black swans either, by the way.
Hey, Ara.
Yes.
Then maybe some events that you may call black swan. What would they be?
Yeah, let's think about that. Things that really caught COVID, and COVID is certainly a black swan type of event because you could see the way the markets were right prior to it. And again, I'll cite what was going on with the dollar. It was weakening in the beginning of January. We were seeing a rise in commodities. You look at the Bloomberg Commodity Index, which was up at 81, 82, and really looked like it was getting some momentum for commodity prices or for emerging markets. And then it got totally caught off because you see the reversal. So COVID is certainly a black swan, especially the economic impact was a black swan. The market was not set up for it. I would really say the Powell pivot of January 2019, because they caught the market, I think, way off guard. And then you see the turnaround because people were positioned the other way. So when there are big positions, and not just contrary, you're always going to have contrarians, but there were some, look at, what's his name, John, in 2007, 2008, who made an absolute killing. They were positioned for it. And you know what? I was working with Solaris Capital. We saw it coming in, not necessarily directly. So there's the difference. What else? I really would have to sit back and think about what I would term a black swan.
How about back in 2011, the Swiss National Bank decoupled the Swiss and the euro?
Well, I was talking about that for
2015, January. But I was actually, we can go watch tape. I was on with Santelli twice, once in December and a week before it happened. And I have 2 blog postings saying, be careful to look for something. Only, and my reasoning was this, and if Judd would put up the Euro Swiss chart, you'll see, if you put up a weekly chart on the cash, you could see it very well. And you see the way it builds out. And the fact that the Swiss National Bank was intervening to such a heavy level and they couldn't lift it off the floor, I put out a warning. And yet you're right though, Mike, because if we look at it, vol levels on that, people were selling vol premium on the Euro Swiss options because, they believed in it. So it did, and you see that one day move, but you could see that they couldn't lift it. And that was my key. That was a trader's instinct more than anything else. So I can't say it was a black swan because I was out there talking about it. I think it's one of the reasons I'm not on CNBC because I actually read a couple of them, the Riot Act. When nobody saw this, I go, when I was on with Santelli and I let a few people have it and, they didn't like it. But I said, if you bothered to listen, that was the exact thing I said. This was maybe a month or 2 months afterward. I said, if you actually bothered to listen to somebody else besides yourselves, you would have heard because it's there. I mean, you can go to the blog and date it and you'll see, because I list those blogs, those Santelli hits beforehand. So I won't call that a black swan. Yeah, for those who are stubborn and arrogant, like the East European banks and some of the European banks who were putting their clients into Swiss loans, they got crushed. They bought into it, you know what? And in my sense as a trader was, you're intervening this heavily and you can't get a lift off of that floor. Just be very careful here. So I have to think about that. I don't throw the term around so easily. So, and I understand people want to, but I have to think about that.
That was
Okay.
2
Ira,
minutes.
it's Angelo. I'm with you on that. So, Michael, I'm not a fan of that term because what it does is it feeds into Wall Street. Wall Street loves having a story or a narrative for everything. Mm-hmm. And if you have a process that evaluates volatility and credit spreads and currencies, so on and so forth, to me, there are almost no black swans, all right? Like Ira said, this Wuhan virus, yes, that came out of nowhere. 9/11, that came out of nowhere. But other economic events, such as the months leading up to World War II, the market started sniffing that out months in advance. 1987, the market started sniffing it out. My point is that IRA has a process for evaluating lots of different risk metrics. I try to do the same thing. If you're looking, you will find the signs, all right? The subprime debacle. That thing was visible as early as 2004 and 2005, okay? So, Taleb coming up with this idea, black swan, you can't see it coming. Personally, I don't believe in that at all. It's just, storytelling. Why did this happen? Why did that happen? It's a waste of time.
Yeah, of course. And the reason I'm asking this is that I saw a pretty interesting article last night, and it's written in Chinese saying, hey, how the Fed could keep printing money and keep delaying what is inevitable. That's the debt cycle. So that's why I'm so interested about the past black swan events, because I guess the Fed has to stop printing at some point. Maybe when the inflation picks up, I don't know. But if and when they decided to stop printing, would that be a black swan event? Because nobody, at least right now, believe that the Fed would stop at anything.
Well,
or they could stop.
I mean, Ira would probably say, and I'm
Go
correct
ahead,
me if you think I'm wrong, Ira. Ira would probably say, no, it's not a black swan event because you can see that coming.
It won't. Mike. So Angela's, is right, but your point is very well taken. Will it be a black swan event? No, unless now here's where it could be. If something, let's say, fell to the earth that nobody saw, which would prompt it. Okay, right now we can actually see a process because the Fed has promised a process and they're locked into a process, which is they're going to stay. And I haven't read through the minutes, the FOMC minutes. Were kind of interesting because some actual real discussion. But again, if I posed a question yet again, and it needs to be posed again, which is we get to December 2020. Unemployment is at 9% and inflation is 6% on headline numbers. Do you think the Fed's going to raise rates? And therefore, if you answer the question yes, well, then it's certainly not a black swan event. Everything that the market tells me right now is no way, no how, no chance.
Ira, can we take that a step further,
Sure.
if you don't mind?
Sure.
Okay. So we get to whatever moment in time, and inflation is somewhere above the Fed's target. Whatever number you want to call it, 5%, 3.5%, 6%, whatever that number is, but it's getting hot. And the Fed internally is thinking to themselves, this thing could get out of control and we need to raise rates. But now we have a problem. What's that problem? The Fed's got this balance sheet. And in order to have a balance sheet, you must continue to match your assets and your liabilities, right? So now, if the Fed raises rates, and here's a question I have, if the Fed raises rates, they're going to get a huge ding on the asset side of their balance sheet, meaning their portfolio. Because now they're taking losses on the portfolio, right? And they're still paying interest on reserves. Now, does the Fed turn around to the Treasury and say, oh, listen, you need to reimburse us for the $700 billion we just lost on our balance sheet, right?
No, because the answer is, as Powell said to Ira Harris on June 27th, 2016, there's a printing press. He was talking about the ECB, but the theoretical concept certainly applies. So the Fed could just print to their heart's delight. More importantly, though, Angelo, and I'll pick up for you there, and why isn't going to be a black swan. What's more important is that, and this was brought up in that piece by, I think, what's his name, Tim from University of Oregon. He wrote actually pretty good piece. I can get that. Hold on. I found it very interesting. This is under Fed not ready for yield curve control. Let's see, is that right? Yep, it's from the blog at the University of Oregon, and Tim I don't know how to pronounce his name, Tim D-U-Y. But he looks at this and it's very interesting stuff, because now that the Fed is monetizing the fiscal stimulus, which they are doing, and they've basically promised the Congress, they told them, go ahead and create fiscal stimulus. We don't want to be the only game in town, so to speak. So, so in order to do this, so if they raise rates, they're going to wind up in a situation where Congress may, and here's what he says, and I think it's a very good point. Let's see, let me read this. Let's see. because they're pushing for, massive fiscal stimulus. In fact, somebody from the White House was out this morning. I didn't know who that was. But they've told them to up the game. So now if they were to raise rates, think of the political fallout. And Michael, this is what we have to concentrate on. It's too early from a trade standpoint, but from a policy standpoint, what you have to concentrate on is that, hey, you know what's coming here? I'll tell you what's coming here. That if rates were to go up, the cost of financing it becomes much greater, and you either then run much bigger deficits because the interest cost zooms, or you start cutting programs. And when you start cutting programs is when you get into the politics. And this is where MMT, modern monetary theory, meets more classic traditional economists and what's going to take place. This is where we're going forward here. I think this is critical. Now,
but Ira, if the Fed suffers a loss on their balance sheet due to rising rates,
yeah,
do they because then let's say they lose $1 trillion on their $10 trillion portfolio, right? Mm-hmm. Do they need to turn to the Treasury to say, hey, we need $1 trillion to right size our balance sheet, otherwise we're technically insolvent?
No, they would never say that, because you know what would happen if they said that? They would lose their independence. They cannot say that.
Yeah, and you know how you keep talking about they'll lose credibility? Yep. Somewhere in there, somewhere in that mix of things we're discussing right now is probably that moment in time when markets realize the Fed just lost it.
Well, I think that's the quiet discussion going on. And when I actually enjoyed doing that that podcast from FRA with Daniel Booth, who I like. You know, she's not afraid to speak her mind, and being what her background is, that's not a usual place, because she has a lot of relationships into the quote unquote financial establishment. So I like that she speaks her mind. This is going to be the issue. There's no getting around it. There is no getting away from it. There's no getting, really. And the fact that they're stuck with this dual mandate. And again, if inflation runs hot, then what are they going to provide us with? Well, we're going to do a 10-year moving average of inflation. So we can let inflation run hotter for longer, because, when you smooth it out over time and great stochastic work, this is okay.
Well, so, maybe to avoid the interest expense issue, Ira, and this was Ben Melkman's idea. He said maybe the Treasury swaps the current bonds that the Fed owns with 50-year zero coupon perpetuals.
Okay, maybe.
And that technically keeps the balance sheet intact.
Don't wait too long, though. So let me.
Could you imagine?
Let me read from Tim, if I may, because he's talking about the FOMC minutes. He said the staff fretted that yield curve control might require Fed to purchase large quantities of debt, such that monetary policy goals might come in conflict with public debt management goals. Okay, so you're basically having you more than blurred the line between policy and fiscal policy. This is, of course, and this is what you have to hear. This is, of course, the type of situation the Fed fears as they perceive that fiscal authorities will strip the Fed of its independence should the Fed desire to raise rates. For what it's worth, I'm not convinced that this argument does not already apply to the existing quantitative easing regime. If the Fed wanted to pull back on the pace of asset purchases now, they might find themselves at the mercy of a Congress unhappy that the Fed basically cleared the way for expansive fiscal policy and then reneged. So you see how the Fed just keeps digging themselves in deeper. They'll never admit it because they're too arrogant. But, you know, you can't hide, you know, the bubble under the rug is already getting so big, it's tough to hide it.
Uh-huh.
And they're now signed on. And I don't, you know, again, that's my problem with all the central banks. Tell us your exit strategy. What are you so afraid of?
Because they have none.
Yeah, well.
No. Well, Ira, you know, that takes me full circle, all right? Because I never believed that we needed a Federal Reserve in the first place, and here's why. The Constitution basically says that the U.S. government has the authority to issue as much money as it needs to pay its bills. So if we get the bankers out of the equation, unelected bankers, okay, and politicians print too much money, right, to pay for all of these different programs, at least the citizenry has the ability to vote them out in favor of people that might be more fiscally conservative or whatever, okay?
You know what?
That's the only checks and balance on this whole mess that I could see. Because, like I said, the Treasury can print the money it needs to spend on whatever it wants to spend on, and we end up in the same place.
And that's what Warren Mosler and Stephanie Kelton, long ago when MMT came to the rise, well, you know what, when a responsible electorate will hold Congress so that this won't run away into hyperinflation or severe inflation because the electorate will be responsible. And when I read that, I nearly gagged because the one thing we know about American politics is once you give people things, it's hard to take it away, right?
Yep. I understand that side of the coin. Absolutely.
So I'm not looking for the responsible electorate that they base this whole thing on. Now, they don't like to say that because I think, you know, that meets with a lot of people, you know, going, huh? Where's the responsibility? Because once you start feeding people all these programs and make it like, you know, well, there's no cost to it because the government has the ability to print money. Well, I think you wind up with some big questions. And me as an anti-military spender, anti-war spender, unless it's absolutely necessary, I am totally opposed to it because based on that, there's no end to the funding of defense programs because there's no culpability. Yeah, I'll just print it. So if you're printing,
but I mean, is there any kind of control on the military-industrial complex now?
Well, far more than there would be without that. I have to say that very straightforward. Very far more because at least you know what, there is a budgetary process that gets discussed. Hey, we saw it with the Bowles-Simpson. When Obama put that together and when Alan Simpson wanted to cut 10%, you know, from the defense budget as the beginning point, and I happen to agree with him because that's the way the budget process works. The defense get everything they want, and then as you vote for those defense measures, then you get all the stuff that you want. It's the trade-off, and it's why the budget has run out of control for so long. But at least there was a process. Here, there'll be no process. Why? We'll just print ourselves. So, okay. And that...
even when the Defense Department wanted to cut programs, they weren't allowed to.
No, that's right. That's right, Judd. That's exactly right. That's
your lobbyists at work.
Yeah.
I mean, the only advantage that I see, right, is that you get the unelected bankers out of the equation. You know, that's it. Everything else is as you described it.
Yeah. So, I mean, but this process, and Michael brings up, so it's not a black swan because we can sit here and talk about it. It's just that we don't know the timing of it. You know, and look we're not the only ones. the best minds in this business. I'm talking about Jeremy Grantham and Stanley Druckenmiller and Paul. They can't time it. So, people say, oh, you're wrong. Because again, if you're early, you're wrong. You're wrong. You're just wrong. Oh, and I guess that pivot in the euro comes pretty good again. We got up to 113.46 in the cash, taking out the 200 week, but now we've stalled out. So who knows where we're going here. But
It
I
doesn't
always
like that level.
huh?
It doesn't like that level.
It
It's
does
looking at
not like
close
that
out
level.
there. Yeah.
And I was totally out against it too. And I just bought some back thinking, wow, this one is, the formation is so powerful, but yeah, we'll see. We shall see.
It's almost too far, to expect it to rally from a rally after it's already gone a figure.
Yeah, it was pretty good. And I still say that, for me, the missing piece, of course, is the yen. The euro needs the yen to go with it now. And it just can't, but everybody's putting on the euro yen cross.
Yeah, it just doesn't want to go. And all the yen crosses are in play.
Yeah.
Aussie yen, euro yen.
So.
How about you put the Nokian dollar on against everything?
Oh, what? Why? You like
Well,
that?
what's interesting about that is that the Norwegian sovereign wealth funds, they've got $2 trillion that they're tapping into, right, to tide them over, unlike anyone else. At least they have a rainy day fund. Nobody else has a rainy day fund other than a printing press.
That's right. That's real Keynesianism, by the way. So
Judd, if you could put up a Noki versus the euro, just as an example, look at that. Well, that's against the dollar, but yeah.
Against the dollar, there it is against the euro. Euro no.
All right.
So Euro's still losing to the Norwegian krona.
Except
and so if the Norwegian government needs $250 million or $500 million, right? They can tell the sovereign wealth fund, okay, slowly sell off some assets in the portfolio to give us the currency that we need to cover our shortfall at the moment.
Hey, governments don't manipulate their currencies.
No, they never do.
just ask the Swiss.
Yeah, and you know what? Actually, but you know what, Ira? The sovereign wealth fund owns the $2 trillion, not the central bank.
Yeah, but there's control over it. There's a committee that controls it pretty well.
So the sovereign wealth fund, I don't think, has to worry about balancing its balance sheet.
Doesn't.
They are the biggest hedge fund in the world.
It has plenty.
In the same way that maybe the Swiss National Bank does, but.
Yeah, but I'll tell you something else. It also therefore has the ability to weaken the currency when it wants. So if you look, the euro NOK is approaching the 200-day moving average. So they can, by purchasing foreign asset, always weaken the currency. Same thing that the Japanese can do by when the pension fund, the massive pension fund, buys foreign bonds. They're basically intervening in the currency. The Bank of Japan and the Ministry of Finance has all kinds of levers if they so desire to weaken the currency. So, definitely interesting thoughts, but be aware of all the different angles.
Ira, would you say that the currency game or the currency markets is probably somewhere in the future where the biggest plays or the biggest money is going to be made? Versus certain kinds of risk assets?
I'm biased because I start with currency analysis and I see, yes, because here we go. We're winding, we've been winding, let's see, range been I'll look at the dollar index just because we can be happy. I mean, look at how tightly wound that is. You've had one down, one up, but really, let's see what, well, here, let's put up a monthly moving average. I know the weekly, let's put up the monthly. The
96.33 is a 200 month.
Yeah, I have 86.77 on the cash. So, I mean, and we're really, when you put up a monthly, you see that we've been in this great consolidation pattern for basically for 5.5 years. I love formations like that. So, yes, I think that's a good point, Angelo, and I think it's going to happen again. When? Don't know. Here, classic case, right? Been watching this Euro 200 week, right? And here we are again, visiting it, what, for the fourth time in when, 6 weeks? Let's see. Is that right? On the Euro. Let me think.
Yeah, 1, 2, 3, 4, 5. 5 times we spiked it in March, and you know, we still have not had a weekly close through it.
Nope.
This year.
We keep knocking on that door.
So, Ira, would the name of the game be to, you know, keep your finger on the pulse of whoever is devaluing faster?
I don't know that anybody really. I think they're careful here.
At a given moment in time.
We know the Swiss. See, I don't think the Japanese are in. The market, they're just watching what the market does, and the market will do it for them. And again, if they want to weaken the yen, they always have the ability. They have the pension fund purchase foreign bonds, looking, and they'll say, "Well, we have no return here, so we're just trying to generate a bigger return. We're not intervening. It's a good cover." Same thing as the Swiss say, you know, which is pure nonsense. So I think people are being careful here because they understand they don't want the dollar getting too strong here. Anybody who's got any thought to them, you don't want the dollar too strong here because then you're going to crush the emerging markets. And it is interesting when you put up the Bloomberg Commodity Index, you know, look where we're at. And that's with the grains on the move, you know. But you look at that chart, now we've gapped what was the old gap. So going back to March, that chart is now getting interesting. And is that going to be a precursor of a potential weaker dollar? Don't know.
All the meats are up.
Let's give a hat to Rob because he was
Rob was all over that.
Really good. And listen, we got a further breakout, I think, on Freeport today, because, you know, the news out of China. Mike, you want to walk us through the news out of China?
So with the go ahead. Well, first of all, that plant that you posted today from Australia to Shanghai, to Singapore rather, the first thing out of Peter's mouth was, "That's a hell of a lot of copper."
You know what? I wasn't even thinking about that. I only did that because I have in fact, I sent him the article. This guy, he's very well known, and he was the head of Argonne National Laboratory. He's 98 years old, Dieter Gruen. He's a fascinatingly interesting guy. And I sent it to him because he's 98. He's working on patents on solar energy. So for all you think, you know, life ends, he's still working on it. And he worked on the original building the atomic bomb at Oak in Tennessee. So he's a very interesting guy, nuclear physicist, who's now working on solar energy patents. So I sent him that, and I'll call him later because he said, "Yeah, I'm glad you sent that to me." That's why I said it, that the alternative energies, they're not so alternative anymore. But it's a very good point, Peter, because part of the infrastructure build outs that we're talking about, from improving the grid, the electric grid all over the country, massive amounts of copper. And then, with the copper that goes into the giant windmills, which I just driving back from Arizona and even go now through Iowa and Nebraska, you're seeing plenty of them, not just in Texas. So it's a growing thing. And it's a good point on that underwater cable, which is going to connect all this. And there's serious money going into these things, serious money. And that was different than the 70s. Again, I'm old enough where I could tell you that the concept in the 70s was when we demonstrated against the Exxons and the Mobils and the Ohio, that they were busy buying up all the alternative energy patents because they could. The oil companies and fossil fuel companies had so much money that they were, and Saudi Arabia, that the conspiratorial theory was that they were busy buying up any alternative energy patents because they didn't want them to come to market. Was it true? There was probably some truth to it. Totally true? No, I don't know. But now, as you see, like with this story on Singapore and Australia, there is so much big money pursuing alternative, quote unquote, green energy that you can't hold it back anymore. Can't. Too much money. Too much money. Look at Elon Musk. And the more money that Tesla becomes, that gives him even more and more latitude to pursue whatever visions he has. So it's pretty powerful. And now they have as much money, the alternative energy forces have more money, I would probably argue, than the large energy corporations. One thing that boggles my mind is what happened to BP. Because when you go back 15, 16, 17 years, Judd, I forgot whose wife worked at BP in marketing. Did Kitty work at, did Corey's wife work at BP at one time? Somebody worked at BP.
I don't think, no, she was selling, she was the top discount future salesperson.
Yeah, I know, but we were talking about, sometimes, one time I was talking about what a great marketing, beyond, British Petroleum spent a fortune on that marketing campaign, Beyond Petroleum. Anybody remember that? Which was brilliant because they made it seem that they were putting all this money into wind and solar, and then they dropped it. I go, wow, you know what? They were really getting a leg up on everybody. To me, what corporate malfeasance that was. But then, oil prices started to go up, so they got enamored with it, which is, I guess that's the way markets, I know that's the way markets work. So it becomes very interesting.
In the 70s, they were buying up everybody's patents for alternative energy. Anybody that came up with anything out of the university, they'd buy the patent and bury it. Yeah,
that's why there's no question that was going on. Now it's just too big. It's gotten way beyond all these people. So thanks. And Pete, that was a good point. I don't know how long it's going to take them to build out that infrastructure, but there's so many infrastructure plans going on. Hey, you got ABB. So Judd, that was a good call last week. And again, ABB Fleur.
Oh yeah, they're just out of control. And your other one, Ballard Power, is up crazy.
Yeah, but that's because the Robin Hood crowd, from what I understand, I'm almost tempted to start getting out of it because it's ridiculous. It's ridiculous. It's been a great, it's an 8-bagger. I don't ever have 8-baggers because I don't stay long enough, but it's insane. And that was a January 2nd, 2019 FT article you can go get from the archives on hydrogen power. And I had known Ballard pretty well over the last 20 years. I've studied it, I've looked at it, but I was not aware that the Chinese bought 25% of it. And that just got me off my ass. I go, okay, if they're getting behind it, because I know the Japanese are still behind hydrogen fuel cells too. So
Just
That
to
was
go
just
30% retracement error, it's $55.
yeah. Well, yeah, I mean, that has been one crazy stock. That's all I'm going to tell you. One crazy stock over the years.
Yeah, this blew up with the NASDAQ in
Oh
2000.
yeah, oh yeah. Well, that was the same thing with plug and fuel. Yeah, there were a bunch of them. Because again, the technology
Oh
was
yeah, plug, same deal.
yeah, it was running wild.
Fuel cell did the same thing. That's gone
Right,
sideways.
right. Yeah, they were. And I'll tell you what else. What's his name's company? Out of Michigan. They were them two. It'll come to me because
Here's a good one. Tesla's worth more than Daimler-Benz. But actually, it's also worth more than Daimler-Benz and Volkswagen Audi put together.
yes, right.
But wait a minute, it's actually worth more than Daimler-Benz, Volkswagen, and BMW put together.
Yeah, think about that.
Hey, wait a minute, it's worth more than the German companies all put together, which are unbelievably good companies,
Yeah.
and General Motors, which is another huge company,
Yep.
plus Ford. It's worth more than those 5 companies put together.
See, and the only problem with that for me is when you have that, is that, see, that's destructive of capitalism because it infers a very static nature that they're going to be the only one, meaning Tesla, in the electric car market. And you know what? Capitalism dictates as profits grow, as margins grow, you're going to have more entries. And BMW, yeah, they're slow on the uptake. But when they do come, Audi, BMW, the Japanese with their hydrogen fuel cells, anybody who thinks that there's a monopoly in this, I think is crazy. It's not going to happen. These guys have too much ability. And what they have even more so, and this goes back, I don't know if anybody will remember this, but in, I think it was December 2013, I did a Santelli Christmas, and he sprung a thing on me in 2013 asking me my 2 big ideas for 2014. And I said, well, I'm not going to, he says, well, what would you like, 2 things you think should happen that won't? Basically, I said, well, Goldman go back to be a partnership and get out of being a publicly listed company. I said, because if I ran Goldman, that's what I would have done, because that'd take me out from a lot of the regulations that were squeezing them. And number 2, GM buys Tesla. And he said, GM buys Tesla. Santelli's a big car guy. He loves cars. He said, why would you do that? I said, well, there's no question that Tesla's technology is good. So why go and try to rebuild this when you could buy it? And at that time, Tesla was trading $125, which was an incredible. I said, and it's true, and I still have the order. I had an order to buy Tesla at $85. It's probably, I'm out of it now because I just pulled it at some point. But I said, if I was GM and this stock came down to $85, or if I could buy it at $85, I would buy it. And he said, well, why? I said, first of all, Tesla doesn't have any showrooms. I would put those Teslas in Cadillac showrooms just to bring traffic into the Cadillac showrooms. And then I would also have service ability, which, I'm not sure, I don't own it, never owned a Tesla. And I've talked to people and are very so happy with it, but you would have that ability too. He said, oh, it's interesting. And I still think it was a good idea, but the established auto firms are just too arrogant, to have pulled that off. But I thought it made eminent sense. So things are not static, and yet the market likes to price. That's why you wind up with the dot-com bubble, because it was built on a static analysis of, the moats, the proverbial Buffett moats. No, there's just too much money chasing ideas right now. And everybody's, barking at each other's, heels. And there's a lot of money chasing a lot of good ideas. And we know that Daimler, let's go back to Daimler and BMW and Audi and Volkswagen and the Japanese auto, they have a lot of money. That doesn't mean you're going to be successful, but they do have a lot of staying power in the game. So that's my point.
Yeah, this reminds me of somewhere back in 2013, 2012, when Chrysler merged with Fiat. So they formed Fiat Chrysler Group. And Chrysler at the time could have used that cash to buy Tesla, but the CEO of Chrysler said, hey, we don't make golf cart here. So arrogant, you know?
Yeah. Evidently, you never drove them. Somebody
It's
gave
an
you a ride
arrogance that you know, I think these traditional automakers should get a taste of it, you know?
Yeah, no, I agree. Mike, that's a great point.
And listen, that the spoons want to trade. Oh, they just printed it. So they just filled the weekly gap here on the daily pit at 56.5.
Yeah.
So it's cleaned up that chart.
I'll tell you what, it is so fascinating. I mean, this board is absolutely in sync. The S&Ps come off, the euro comes off. If this is gonna be another really good test for the euro here. But I think if the yen really were to take off there without the euro really backsliding, then we would know that the dollar, that's been my focus for 3 or 4 weeks already. So we'll see. But again, here we are up at the pivot.
Yeah, and the yen's just sideways.
All right. So there was a question about now Germany. I'm going to answer that, and then I'm going to go. Accepted in principle a common approach to euro bond. Yes and no. It's not as definitive as that. So what's the next step in the process? I don't know. But if you read the news out over the weekend, and again, they don't mention Schweibel, which boggles my mind. Are these media people, are the journalists just stupid? Because they talk about, well,
Or they're corrupt. That's what they're the worst generation of journalists ever.
they're the Bundesbank has gotten the okay to keep buying bonds. That's what really drove the, because I was watching the Bunds last night when they opened, they were a little bit lower. But when you look at them, and what was the story is that they were given the okay, right, to be able to pursue continual bond buying, right? Why? Because let's go find the article. We don't even have to guess. It was in the FT. I'm sorry, I don't like doing that. ECB. I know I read it. I know I read it in the FT. Basically, that they got the okay to keep buying bonds because okay.
Yeah, it was the Italians and the.
Well, they let it. Yeah, there was no
they
doubt
let
about it. Yeah. But let's see what the exact headline was because it was about the ECB. Basically given the here. Bundesbank to keep buying bonds after court challenge. And the article said that because, and they're right about this, 2 officials briefed on the matter told the Bundesbank will later this month form the German central bank is so Peter Huber, one of the judges who drafted the court's ruling, the High Court in Germany, told the Frankfurter Allgemeine Zeitung newspaper it would not sit again to determine whether its conditions had been satisfied. Instead, would leave it to the Bundesbank to decide. The Bundesbank is bound by our decision, but it must determine on its own. Bundesbank. Within the days of the Bundesbank passing these documents on a politician, wrote a letter declaring that the ECB, okay, this all of, so because the issue was taken up by the government and the Bundestag, in fact, it does say Wolfgang Schäuble declared that the ECB had fulfilled the requirements of the court because it had been perused and okayed by the government and by Parliament. So it met all the requirements, and that's really why it takes. So it looks like it's removing the court from now, and that's why Merkel, now that she's president of the EC for the next 6 months, and all the work that was done, and Schwabel's comments. So it looks like he has the ability, Wiedmann, to keep buying bonds, and he will not be, and he's met the requirements of what the court laid down for him. So it kind of removes that whole thing because now the proportionality assessment has been done. So that's a pretty powerful thing, but this is what we've talked about. This is not, this is not new, and the politicians have done it. So again, so now you have potential taxation with representation. Why? Because Schwabel and the Bundestag have analyzed it and reviewed it and said, okay, it's okay. It's okay. And now the court's out of the way. Okay, so that's an important issue. But where do we go here? I don't know. I don't know. Because again, politics is politics and it's going to take a while to work itself out. But there's no question that Merkel and Macron, as Merkel said last week, and again, underreported, he said, Europe has to be very attentive here because the world is watching. I'm quoting Merkel. I'm not paraphrasing. The world is watching. That she was very aware that the world, you know what, they've gotten away with murder, meaning the European Parliament and the things that they've done and back and forth, the German austerity, all the other things, that there's no time for them to dawdle anymore. The world is, and she said, the world is watching what we're doing. And if they're looking for credibility on the world scene and want to be taken seriously, then you got to get serious about, are we a federation? Are we a confederation? What are we? And if we're a federation, you are going to have to set up some type of Eurobond. How and when? You know, if I was running the show, I would be done very easily. I would just take all the debt that the ECB owns and convert it to a Eurobond. There'll be hell to be paid, but there's going to be hell to be paid anyway. So would that be the quickest stopgap? And I'm sure Bernard if Bernard was listening to this, Bernard Connolly, he'd pick up the phone and scream at me, are you out of your mind? I said, Bernard, it's just gone so far. You know, when something, you know, goes so far that and that's been my point. The Germans are stuck because they can't any pullback by the Germans would cause a major financial calamity. I don't see any other way. If you can show me another way, as I've challenged this room for 6 months. Go ahead. Tell me how you can get out of this. I don't know how you get out of it. And the Dutch are the Dutch, and you know what? They're I'll tell you what, they can be a problem, but they run as much risk as everybody else, because who can tolerate a major financial collapse? Because then you will get the deflationary scenario that everybody is so terrified of. You'll bring it on yourselves. Mike, you want to see a black swan? That's a black swan. Germany pulling out overnight. That's a black swan. Because
Ira, when is Merkel's last day?
Oh, maybe December of this year. You know, she's got the Germans have the presidency of the EC. You know, that's a 6-month rotating deal. I think this year, or the first month of 2021.
Yeah. So she's got a little bit of time to bribe the Dutch.
But she don't have to bribe the Dutch. She don't have to bribe the Dutch. Just has to start those engines on those Panzers. No, I'm joking. I'm joking. It's my bad humor. It's
So
my,
listen, before you go here, I want you to take a look at the NASDAQ bonds on a weekly. It's coming up to the all-time high. So
well,
it's all tip.
Judd, that's, yeah, and you'll send me that one. But I'll tell you what, it's also an interesting part for all the bulls on the equity markets. When you really look at the bond, the S&P bond, it's had a nice recovery, but as we know, it's really not doing anything, by the way. You got the 200.
So Judd, you had up that the 200-week dollar index bounced off the 200-week. VIX higher today, bounced off its 200-day. NAS, you just put the NASDAQ bonds up. We're getting similar sets again.
Well, you know what? Yes, because the 200-week in the dollar index is almost the same as the euro. So they've been in total sync because of the heavy weighting in that index with the euro. But you're right, Angelo. They're right there together. They are right there together.
Yeah.
Every time the dollar index bounces off that level, stocks pull back.
Yeah, it is.
I mean,
isn't that? That's been my focus. So I find it so friggin' interesting, isn't it?
Yeah.
Well, let me go back. Let me see what the correlation is. Hang on one second.
But I'll draw you out the correlation, okay? Because if you laid it over the euro going back to May 24th, May 25th with the Schwabel comments, which I put so much weight on, you could see how they run together. So once it looked like Europe was going to start to get some of their stuff together and maybe really come forth with a massive stimulus package, the equity market, the S&Ps ran with it too. They're totally in sync.
Yeah, the 30-day correlation S&P to the dollar is negative 72%. It's high. It was 90-something last week %. So, stocks definitely like down dollar. That's for sure.
They do. They do. And, and we've maintained that if you really got the dollar going down, you'd get that final leg up, that everybody's looking for, to 3,400 in the S&Ps. I'm not saying that's a for certain, but if you're looking for another catalyst to equities going, a down dollar would probably do it.
Well, here's another potential catalyst to get us over the hump, Ira. You know that roughly 1.6 trillion that Mnuchin is sitting on over Treasury?
Yeah.
What do you suppose he's hanging on to that cash for?
Well, I think because the revenue stream is going to be so bad that he doesn't want to get into a budget situation.
You don't think maybe we have an election coming up and they want to goose the system some more right before the election?
Listen, he's got power to goose it because Congress will not say no to. The only ones who will say no are the stupid Republicans at this point in time.
Can't. They might as well just shoot themselves in the head.
Well, we know that's capable. They're capable of that, right?
Yeah,
if they're going to choose this moment in time to take an ideological stand, God help them.
I know. You're a little too late, I think, don't you?
But
you know what? They may as well at the Republican convention play the song from MASH, "Suicide is Painless."
But I think they're going to spend that 1.6 trillion. I never doubted that they wouldn't extend the PUA benefits and come up with some more checks, stimulus checks.
That's a low figure. Because I think that the Democrats want to throw a lot more money at it, and if given the chance, they will.
Oh, well, they might. All I'm saying is Mnuchin's got 1.6 trillion of dry powder on hand.
The problem with the Republican scenario, though, is you're feeding Trump, and that's what they're stuck between here.
Yeah.
And Trump is a good enough businessman to understand he's got a lot of levers in play here, and it's hard for the Democrats. You know, he must look at McConnell at times and go, "Shut up, shut up! They're providing us with everything that we want."
No, I think that McConnell's is doing some blocking and tackling for Trump, and here's what I mean.
Okay.
I think Trump wants to try and delay it for as long as he can his announcement for some sort of additional stimulus. All right.
Okay.
You know, maybe he wants to announce it, you know, September-ish.
Okay.
Right, sometime a little bit before the election, so that he can turn around and point his finger at the Democrats and say, "See, they don't want to give you American people more money. They don't want to extend your unemployment benefits, et cetera, et cetera." So I think to me, I'm playing conspiracy theory. I'm just saying McConnell.
He's going to drop out, and Kanye's going to take his role.
Yeah. So I think McConnell's doing it on purpose, just to push it a little bit farther back.
Hey,
closer to the election.
McConnell's got his own problem. He's in a tight election as it is.
Yeah, you know what? And don't think that Kanye may not be a stalking horse to grab some of the black vote in an effort. You know, what has he got to lose? Because he's been a Trump supporter. Now, I would hope that he's doing it for far less Machiavellian reasons, but I had to think about it because. And he's just floating it out there. You know, it's a classic stalking horse because he'll see what kind of response it gets. But believe me, the Trump presidential reelection has enough money. They could help. I don't know what the electoral laws would dictate, but it's not bad to run somebody like that who would siphon off a huge amount of celebrity vote. Because we saw what Nader and then what's her name did in 2016, right?
Yeah.
With the Green Party, whatever, I forget her name, but you all of a sudden.
I just don't think anybody that's got a brain is going to take him seriously, but you never know.
You know what? Listen. Yeah.
Don't be surprised if you see a huge stimulus proposal by the White House.
Oh no, it's coming. They put it out there today. It's coming, and he's going to do it under the infrastructure. Say, well, you know, we weren't prepared, but here's what we're putting forth. You know, I think the copper tells you that.
Yeah.
So, they'd be first of all, as again, I'll say it until I can't say anymore. A pox in all their houses. This is not a partisan viewpoint at all. Not to have had an infrastructure plan, a plan in place to audit. What are you doing? You know, running those massive deficits before COVID hit. You know, everybody forgets we were already over $1 trillion deficit in a relatively good economy, especially relative to the rest of the world. And yet we're, you know, because of the wastefulness of those tax cuts and the way that they were constructed, we were running deficits that were too big.
Yeah, because at least your infrastructure spending is quote unquote investment.
Yep.
You know, at least you're getting something for it.
Yes, that's right. That's why it's investment. This you're not getting anything. It's triage. You stop the bleeding. Okay, I understand stopping the bleeding. You wanted to prevent, again, like you did in 2008 and 9, a massive liquidation of the economy because that wasn't going to do anybody any good. Listen, you got a massive liquidation of small businesses anyway, which is why we jumped to what, 14, 15, 16% unemployment. That was bad enough. Imagine if you had a huge amount of insolvencies. Oh, boy. You know, you would have really been running crazy.
Well, I think that's coming.
Well, yeah, we'll see. I don't not disagree with you. That's not a, we'll see.
Well, so that basically
You know,
gets
this-
back to your conversation with Booth, the fact that there's no chance that we can really back off much in the indices because somebody's going to be there with more stimulus.
Yeah, oh yeah. Listen, they listen to them. Now they tell you first. The only one now, you know, you get cuddle. I really, some of these people are just. I'm more than irritated. They just irritate me. And then they roll them out. You know, have some sense. You know, there is none. There is none. Everybody's just a political whore. Let me get close to power. Let me get close to power. It'll ensure that I have a high income for the rest of my life when I'm done.
I couldn't. I had.
So, all right. I get anything else? I'll take one more question, and otherwise, I'm done for the. Thank you for the NASDAQ bond. Appreciate it. So that's it. Again, watch your currencies, and I still think the yen is the maybe the most critical element to the currency game.
All right. Well, thanks, Ira. Appreciate it.
Okay, good. Thank you. All right.
Okay.
All right, see you, Ira.
Okay. Be well. Bye bye.